Hello everyone, thanks for joining us this morning and welcome to this educational presentation of how to quickly identify the overall trend. Now really when you look at it, this is probably the most important thing you will ever do as a trader or an investor, regardless of the market, regardless of what time frame. Because once again, if you think about it, what is the most important thing? To be in sync with the market. The secret to being consistent is simply to want to do what the market wants to do. In other words, if the market wants to go up, if the trend is up, well, then you want to be a buyer. If the market wants to go down, if the overall trend is down, then you simply want to be a seller. That's how you will be able to have longevity in your trading and be able to trade not just 1 or 2 good years, but 10, 20, 30, 40 years down the road, because it really is as simple as that. The only difficulty is that traders get too caught up in the moment. For example, 80% of all traders will eventually lose money. That's the trouble with this, because you get too caught up, you overcomplicate your trading, and you really make it more difficult than it has to be. The facts are saying that 15% of all traders would just break even. So most traders are just really treading water if they feel that they're really being successful. They're really not. They're just treading water. Ultimately, this means that only 5% of all traders are consistently profitable. So we have a pretty good sized crowd here today. If there are 100 people in this classroom today, that means only 5 of you will be consistently profitable, be able to make profits on a consistent basis. Now this looks like a pie chart right here. If we look at this, we can see that this large portion in red represents the majority of traders who will eventually lose everything. This green slice, or I should say blue slice, represents traders who will break even, and the small green slice, the small green slice, only represents a percentage of traders who will consistently be profitable. So I'm giving you these statistics this morning not to scare you or dissuade you from trading, but just really to open your eyes to see how things really happen in trading. So you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Think of it. You're always going to webinars. You're buying the most expensive system. You're looking at all the earnings reports and financial data. But why is it that only a small percentage of traders are consistently profitable? Well, it really isn't that difficult. In fact, it's actually rather simple. This small percentage, this 5%, are consistently on the right side of the market. They understand and they've learned how to listen to the market, and so therefore they're doing what the market wants to do. So let's look at this example of the spiders this past, I'd roughly say 8 months to a year or so. See, traders get too caught up. They think that things are going to last forever, and it's so simple, and all you have to do is buy when somebody generates a buy signal or some system does. And then all of a sudden, when things are going the best, that's when the environment changes. So you start to think, well, maybe it's gotten choppy, it's not acting as well as it did before, it's not bouncing as much. Maybe I'll just increase my position or I'll buy more. And then this happens because you think there's support, and then ultimately there's no such thing as support. That so-called support, or where all the institutions are supposed to be buying, really doesn't amount to much. So you throw in the towel, you've lost a portion of your money, you say, that's it, I'm going to get out of this forever. There's no use in buying or investing. Or maybe if you have a little bit of money left, you think, well, this market's really going to crash, I'm going to sell everything. And then this happens, right? Well, I'm going to share with you a simple tool in today's presentation, a tool that's automatically designed to put you on the right side of the market. Now, it's not going to pick the bottom, it's not going to pick the top, but you're going to have a level of consistency that you've never had before. In fact, there actually is this tool, and you have it accessible right now. So you're going to see how simple it is and how we've made it even simpler to apply this tool on our platform, the PTS Primo Charting platform, the educational tool that teaches you how to be on the right side of the market. So thanks for taking time out of your Saturday morning. My name is Steven Primo, President and Founder of Specialist Trading. Today promises to be a great educational presentation. If you're new to my webinars, we are all about educating you. In fact, that's our only goal. Our goal is not to force feed you some system that automatically generates the best signals, that really takes you out of the game, that makes you just basically be a participant, and all you have to do is buy and sell whatever we tell you. That's, in fact, a recipe for a disaster, in my opinion. That's the way the entire industry is based on, just simply purchasing some system, or go to some chat room or trading room, or buying some signal-generated performance newsletter or subscription service, and just blindly taking and following whatever they do. The entire industry is based on that, and in my opinion, that's why roughly 80 to 85% of all traders fail. What most traders are lacking is sound fundamental education to make their own decisions. So this is the gap we fill at Specialist Trading and Pro Trader Strategies. I've been trading long enough now, 4 decades, to realize that this really is what's missing. And so we really want to educate you. You'll see the attention to detail we give in educating you in today's presentation. So I'm going to share with you this simple tool, and you can start applying this as early as Monday if you'd like. But before we begin, once again, as always, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results. In fact, we're going to break precedent here and look at some live charts. By live, I mean things that happened up until yesterday, so you can see how well this tool works. We're going to show you a lot of performance results, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So once again, as you're taking a brief moment to view our required disclaimer, I'd also like to invite each and every one of you to follow us on Twitter. We post different information on a daily basis, lots of great free information, things to learn from, see our signals that were generated, to actual little bits of financial wisdom. So feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. It's abbreviation for Specialist Trading at SPCLSTTRADG. Okay, so once again, I stated in the opening statements, we are different from other webinars you may have attended in the fact that we are an educational company. That means that we're not here to tell you what to buy or what to sell. I can't tell you how many times I get emails on a daily basis from new students saying, Steve, just tell me what the best time frame is for this strategy, or tell me what's the best market. That's all I want to know. See, once again, we're all trained to have someone tell us how to trade. And that goes against our philosophy. Our philosophy is to simply provide you with the information, to give you the ingredients, work with you, so that you can feel comfortable using them and decide how you want to apply them. Our courses come with upwards of 6 or 7 different entry points, 6 or 7 different exits and stop placements, different ways to apply money management. But ultimately, it's up to you to decide. That's how you become a consistent trader, not by going to a chat room and seeing what everyone else is doing and hearing how someone made 20,000 last week or last month and just trying to copy what they do. That's, once again, the way the entire industry is based off, and once again, my opinion, why 80% of all traders fail. Don't take yourself out of the game. Put yourself in the game by making your own trading decisions, okay? So as you see here, my goal is not to tell you what market to buy or what time frame to trade. My goal is to teach you how to trade with the Specialist Edge. Remember, a good mentor does not trade for you. A good mentor teaches you how to trade so you can make the decisions on your own. Okay, so with that stated, we're going to share with you this particular tool and go into some live charts later on. But once again, we have a good crowd here, so I don't want to stop at every slide. If you happen to have a question, please wait at the end of the presentation or when I prompt you for any questions. If you're interested in looking at some stocks later on, we'll punch up the charts. But please wait and hold off, and I promise I'll get to each and every one of them, okay? The only question I will answer is, once again, yes, this is recorded. That's the most popular question I get. So don't worry if you have to leave early, if you can't hear my voice or see the screen properly. Oftentimes it's your own internet connection, but don't worry, we will provide each and every one of you with a link to this recording today. All right, with that stated, let us begin today's educational presentation. Okay, so once again, we asked the question at the beginning, what if there were a tool that was automatically designed to put you on the right side of the market? Because as I stated, that's really what trading is all about. You don't have to make it more complicated than it is. It's really just simple. Your job as a trader is twofold. The first requirement is you want to listen to the market to find out what it wants to do. All right, does it want to go up? Does it want to go down? That's it. Does it want to go sideways? I guess you could say that as well. And then lastly, once you decide what it wants to do, you just jump on board. There's no reason to overcomplicate it, to try and pick a top, to pick a bottom, to look at the interest rates, the earnings. I mean, you can do that if you want to, but there really isn't any reason. And the reason I say this is because that's the way I traded 42 years ago, probably before any of you even knew what trading was. I was doing the same exact things most of you are learning today or going to websites or paying exorbitant amounts of money for, to do the same thing I was taught 40 years ago. And it didn't work for me then. My first two years of trading, I almost went out of the business because I couldn't make any money. So What you really need is to simplify things. And the first thing you need to do is to be in sync with the market, to be on the right side of the overall trend. So how do we do that? What if there were a tool that could automatically do this for us? And as I told you earlier, there is. It's called the BuySell Line. You've heard about me speak about this before. And this is probably our second most important tool. I've often stated, and you've heard me say this as well, that if I were stranded on a desert island, I could only use one tool, it would be this. This one simple tool has really saved me so much heartache and kept me out of a lot of trouble. And I really feel is a cornerstone for me being able to trade some 42 years down the road. Now, the buy-sell line is not some $10,000 indicator if you haven't gone to my webinars before. It's not something that you have to calculate that takes 5 hours every night. It's simple. You probably have it in your possession right now. It's the 50-period simple moving average. But see, most people use this incorrectly. Let me share with you the correct way to use it, okay? In order to use the buy-sell line properly, you have to ask yourself a question. And you must ask this question prior to any trade you take. I don't care if it's one of my setups on one of my strategies, something that you've created, maybe something you purchased from another educator, so-called educator. Always ask yourself before you buy or sell, and that is, where is price in relation to the buy-sell line, okay? In fact, I tell my students, especially the beginners, to copy that sentence down, put it on a Post-it, and post it on your computer screen. You should always ask yourself, where is price in relation to the buy-sell line, okay? Let's say your strategy gives you a buy signal. Let's say that the buy signal is below the 50-period moving average. So what do? Well, if price is above and you have a buy signal, or if you're thinking about trading this particular market, then you will only have a buyer's bias, okay? It's that simple. And conversely, if price is below, you will only have a seller's bias. So once again, let's say you made up a strategy. It works okay, but you're just basically in that 15% treading water, not really having anything to show for all your hard work, and it generates a buy signal. You say, well, okay, well, I think I'll buy this. Always ask yourself, before you buy it, where is the price of whatever you're buying in relation to the 50-period moving average? If it's below, the odds are in your favor that you will be more consistent if you take only the buy signals that are above. So I wouldn't even take that trade. Now, is that guaranteeing that it's going to be a loss? No. But remember, trading to be a consistent, successful trader is about numbers. It's a numbers game. 2 steps forward, 1 step back. I always say this same correlation with going to the slot machines in Vegas. And, you know, it's the same exact premise where the slot machines will give you a win every once in a while, and you'll get this false sense of security thinking that you're doing okay. But they're designed to do that to keep you there, because, you know, if you stay around long enough, you're going to give all your money back. Trading below the 50, buying below the 50, and selling above the 50 is exactly the same thing. You'll get a win every once in a while, and you'll start to think, I'm not going to listen to this guy, Steve Primo. He doesn't know what he's talking about. But if you continue to do that over time, trust me, you will have nothing to show for it. You will eventually give everything back. Why? Because you're not trading with consistency. You're not in sync with the overall trend. So just try this, all right? And I'm going to share with you today how simple it is to apply this. Now, remember, we looked at this first example of the spiders. This is the ETF that represents the S&P 500. This is where traders have difficulty. They say just when they're getting in sync with the trend, things change, and then it goes the opposite direction. Well, sure. Remember, the 50-period or buy-sell line is not designed to get you out at the top or get you in at the bottom. It's not designed. No one can do that. I mean, I know you've probably gone to webinars or purchased systems that say they know how to do this perfectly. I've been trading for 42 years. I've never seen anything designed to do that perfectly. And why would you want to? It's silly. All you want to do is get the big move while the trend has already taken place. So if we add the 50-period moving average, we see that, all right, all along this way, we should have been a buyer. Once we had anywhere from 3 to 5 closes, we want to be a seller. And then we get 3 to 5 closes, we want to be a buyer. This is how simple it is. You can already start doing this. Now let's look at a monthly chart of the spiders. Someone looking at this would say, gosh, going back to 2010, 2011, how did we know the market was going to keep going up? Well, we didn't know how high it was going to go. No one knows that. But you knew only to be a buyer on a monthly time frame. Once you added the 50-period moving average, you see right here at this point in 2011, price was above. Remember, you need 3 to 5 closes above or below to confirm. Now, even though you may close one or two times below, that's not enough. So you'll have these little bounces below and then back up again. That's fine. But look at this. We continue to go higher and higher into 2019. Let's look at an everyday stock, DVN, the same thing. Someone looking at this would say, gosh, Steve, I thought I was supposed to buy this. I went to this chat room and they said this thing was too oversold. Every time it bounced, it would make a high and then go lower, and then it would bounce again and go lower. And I kept buying it every time it made these lows. This is the way most traders trade. And this is why most traders eventually lose everything. It would be a lot simpler if you are in sync with the overall trend. And you don't have to spend $10,000. You can do it right now. You apply the 50-period moving average. You knew well up here that you should be a seller, or at least out of this market. You shouldn't be buying. I don't care what someone in a trading room says. Don't buy this because the market is telling you it's below its 50 moving average. You don't want to be a buyer. You would have had a better time simply either being out of this market and saving your money, or every time we bounced, look for some type of shorting opportunity. Bounce, sell. A bounce, sell. About UA, the same thing. This is the way most traders will trade. They'll say, boy, Steve, they called some big bottom right here, and I bought it, and it looked pretty good for a couple of weeks, and now we're even lower. Well, it's the same exact process. All right, you knew well in advance up here, many points higher, that you should not be buying this. This is the way this simple tool works. You will add tremendously to your consistency if you apply this simple tool. Now, remember, this is a tool, but sometimes you have to, be a part of the process. It's not always so cut and dry all the time. For example, in this older chart in CREE, basically the market's going sideways. It's a little difficult to define what's going on. And if we apply the buy-sell line, we see, well, originally we were below, but now we've seemed to bounce, and we're kind of oscillating above and below. So how do we define? Well, remember, the rule of thumb is that look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend can be established. So just because we have one close above does not tell you, okay, I guess Steve says the overall trend is up, right? No. Or just because we have one close below does not mean that the overall trend is down. You need a little bit more confirmation, 3 to 5 bars. Okay, so it's up to you. Some of our students like to wait for 10 bars. That's fine. This is not written in stone, but that you need a little bit more confirmation than just 1 bar. And also, please remember, this is not a trading strategy. If you have 3 to 5 bars closing above the 50 period in your stock or your future or your currency pair, that's not a sign to simply buy at the market. That's a strategy. You need to have a strategy where you exit, where you enter, where you place your stop. This is just telling you what side of the market to be on. That's why we call it the buy-sell line. Then once you know what side, you apply the structure in the form of a strategy. So that's part 2 of this lesson. We're only talking about part 1 in today's webinar. Okay, so as we see here, we're well below. Now we start oscillating, but what do we have here? Well, we have a total of 1, 2, 3, 4, 5 closes. So even though it may look as if the market's going sideways, the market is really giving us a tremendous clue. It's telling us it wants to go higher. So if you had thought about shorting something right here and it's not working out, I would definitely cover. Or if you were thinking about going short, I would change your mind entirely, because you have a total of 5 closes above, and then look what happened. So you see how the market was giving you a tremendous clue as to what it wanted to do. So don't ever play the victim and say, gosh, how did I know this market was going to go up? Well, you knew well in advance. You didn't have to pay $10,000 for some system. You didn't have to go and subscribe to some nightly chat room. It's right there. It's free. All right, same thing with MRK. But remember, we're not saying this is 100% foolproof, but you will add to your consistency. There will be some minor losses, but you have to continue to use this. Remember, being a consistent trader is a numbers game. 2 steps forward, 1 step back. The 1 step back means that every once in a while, it will not work. You will have a minor loss with this concept. For example, once MRK crossed above the 50-period simple moving average, right here, you had 5 closes. Let's just say you bought on this breakout right here, and you went long. And for 3 to 5 bars, you were looking pretty nice. But it didn't get to your exit level yet. Now price starts to sell off. Let's say you didn't get stopped out. You're still in the trade. And you're thinking, gosh, Steve said this stuff's supposed to work. It's not working at all. Remember, it's not 100% foolproof. Nothing in the market is. I would be doing you a disservice. I would be lying if I said that this works 100% of the time. what type of a mentor would I be if I didn't share with you the truth? But the truth is, you have to be consistent. You have to stick with it, because let's say you're still holding on to this position. Well, look what's happening now. We're given warning signs right here. In fact, we have a total of 9 closes below the 50-period moving average. Even though it looks and appears as if it's doing nothing, it's actually screaming that it wants to go lower. So you should be out of your position entirely and only looking for shorting opportunities. Well, what eventually happened? Well, the stock did fall out of bed and Merck fell 8 points in the next week. So the market is always giving you clues what it wants to do. We just have never been trained to listen to the market. We're always trained to listen to some guy on TV. He knows all the answers. We're always trained to look at the earnings or look at the institutions. They know what they're doing, right? Support and resistance, they must have all the answers. Or even some guy in a webinar. He must know everything, right? Why not just listen to the source? And what is the source? It's the chart in front of you. The market in front of you tells you just about everything you need to know. Now, I know a lot of you are saying, this is just too simple. I've never seen something this simple. How can this work so well? Well, if you're not convinced yet, let's look at some other charts. Okay, this is a chart of the Dow, okay, where the market was going up and then it started to have some trouble. Looks a little familiar, right? The only trouble is, if we look at the date down here, this is October 1987. I can almost assure you that the majority of you were not even trading then. Well, I was. I was on the floor of the Pacific Stock Exchange, okay? Now, let's apply the 50-period moving average. Up until that time, things were great in 1987, but right here we started to have a little trouble. We're oscillating below, above, and back below again. Now, where someone would say, well, we're just making a base, we're just gathering steam, someone who knows this principle would say, you know, this is a kind of a warning sign or a red flag. It doesn't mean that the market's going to go straight down, but it doesn't mean it's going to go straight up either. In other words, we have 3 closes here, we have 1 close right on the line, 2 more below, and then it closes back above. And then we have, I believe, about 8 or 9 closes below, and then we have some more closes above, and then we have 3 more closes below. So this is the market telling you there is some tremendous indecision, if not negative indecision. So I would get out of the market entirely, and then look what happened in the following weeks. The crash of 87 would have been comparable to a one-day market drop of over 4,000 points in one day. Now, a lot of people think that this is the crash, but this one day is the crash. So you had plenty of time to know that you were well below the 50-period moving average before the crash occurred. All right, let's look at another chart. This is the spiders, a weekly chart of the spiders, the ETF that represents the S&P 500. Same exact thing. We're well above the 50, but then we start to have some trouble here, okay? Well, the only trouble is this is January of 2008, a good 10, 11 years ago. So we were originally doing well, and then right here we had 1, 2, 3 closes below, kind of 2 closes above, and then 1, 2, 3, 4, 5 closes below. So lots of warnings coming once again on a weekly time frame. If you were thinking about buying, I would have strongly suggested maybe hold up a little bit until the market gives you more confirmation. If you were already long, I would have strongly suggested, well, this tool says that, you know, there's some trouble going on here. You may want to raise your stops or maybe exit a portion of your position. If you're an aggressive trader, you may want to exit the entire market altogether. That probably would have been the best advice, because that was the beginning of the 2008 financial crisis. Did you need to know anything about economics? Did you need to know anything about interest rates? Absolutely not. Trust me, I don't. I don't follow any of that information. But I was out of the market entirely. In fact, some of our students did the best during this entire time period because it was so easy. The markets were so strongly going down. It was so easy to get short. So, you don't have to make trading more complicated than it is. If you want to look at all this financial information and try and decipher all these things with companies and what the economy is doing, you can, but there's absolutely no reason to. All right, let's look at another chart here. This is the spiders again, a daily chart, kind of have the same pattern where we're above the 50, and then we have a total of 1, 2, 3 closes below. Okay, when was this? Was this in 2001? Was this in 1992? Actually, this was just in, if we go back, October of 2018. This was just about 6 or 7 months ago. Okay, but we all remember what happened at the end of last year. We had a really strong down market. A lot of people thought, that's it. The market is finally topped out. We're really going to crash now. It's going to be terrible. Well, we had on a daily time frame a warning right here, 1, 2, 3 closes below. More than enough if you're an aggressive trader to think that things are going to get negative. And look what happened in the next 3 months. The Dow Jones fell 4,600 points, okay? So does the market give you clues? Yes, all the time. It's just that we're not trained to listen to the market. We're trained to listen to that guy on TV talking about interest rates. He knows what he's talking about, right? That economic forecaster. We're trained to look at the institutions. I mean, the institutions are the big money. They know what they're doing, right? Why focus on these things that I focused on 4 decades ago and didn't work for me then? I'm giving you a free tool you can start using in a couple of days on Monday, okay? Now, if you don't believe me, go back and research the last 10 to 20 trades you had. I don't care what strategy or system you're using. I don't care what it's based off of. But I can almost guarantee you that the losses you had were due to the fact that you were out of sync with the buy-sell line, this simple tool, okay? Now, we're going to do something a little bit different. I'm going to ask you to look at our disclaimer here because I'm going to show you a lot of performance results from very current or recent charts going back the last 3 or 4 months in stocks. We're just going to mainly look at stocks because most of our attendees here are stock traders. But trust me, if you want to view this on currency pairs, if you want to look at this on Bitcoin or on commodities or on futures, you can do the same thing. Just whatever chart, whatever time frame you trade, apply a 50-period moving average, okay? Now, we have data for all those different markets, all those different time frames, but just to keep things simple, we're going to just view daily stock charts for right now, okay? Please remember that all examples I'm about to share with you are strictly for educational purposes only. All right, so let's toggle over onto our platform right here. Let's see, here we go. Here is the PTS Primo Charting platform. Here are all of my strategies, all of our techniques and methods that I've accumulated in 42 years. We make everything simple. Everything is one click away. Now, today we're just going to simply talk about the buy-sell line because that's the first thing we teach all of our students. The very first lesson is to properly apply the buy-sell line. And most students, when they learn how to use this, their eyes, light wide up, and they're like, "This is just too simple. Now I realize why I lost so much money before." And then it'll work, but then every once in a while they'll see a great bottom that happened or a great top that they didn't take advantage of, and they'll forget about using it, and then it goes to the wayside, right? Does it sound familiar? That's what most people do. Same thing with any endeavor. Dieting, it'll go great for a while, and then you have one big meal, and then it's all out the window after that. It's the same thing with trading, too. It'll look great, and then you miss one, or somebody in a webinar talks about this great system that picks the tops and bottoms, and then you forget it all. So we design things to be as simple as possible. Now, here is the buy-sell tab. Remember, we designed it to be as simple as possible so that you would use it. Now, obviously, if you're just going to use the most basic, you'll apply the 50-period moving average, as you can see here. And price was below, and so you should have only been a seller in Apple. This is a daily Apple chart. And then once we went above here in February, you should only have been long and still be long, okay? Now, it all sounds well and good until you forget about it. So we designed different ways in which to approach it. I'm going to share with you, we have 4 different ways in which to apply the buy-sell line. I'm going to share with you our most popular and the simplest way, which is our fluid, okay? What we do is here is the 50-period moving average, but anything below, we color a reddish orange. Anything above, we color a blue. So now you have a color reference, and it makes it simple. All you have to do is say, well, once we have 3 to 5 bars in the red, I'm a seller. I have a seller's bias. Once we have 3 to 5 bars in the blue, well, I have a buyer's bias. And that makes it simple. You can apply virtually any strategy. I'm just going to take one strategy, for example, strategy number 4. All right? Now look how simple it is. Once we were in below, look at the sell signals that were generated, okay? Now these didn't work out. You might have gotten stopped out. This is what we mean by consistency. But then once you got back in, do you think it could have helped you anymore? Now we're not going to be talking about strategies today. I just want to show you how simple this process works. Let's look at some of the other most popular charts. Let's look at Facebook. All you have to do is simply click it in our tab there, and we'll share with you the same exact information. As you see, we were below the buy-sell line, and then coming in January, look at the amount. We have 3 to 5 closes just right here. That's all you needed at 140, 142 to tell you that we're going higher. How high? We have no idea. But guess what? We've been up 50 points since that little clue right here. Do you think this could help you at all? All right, even though we gapped up and we started to sell off, this is where people say, well, that's it. We're going to come all the way down. There's too much resistance. This is where all of the institutions are selling. As long as price is above the 50, look for a buying opportunity. This is a buying opportunity, not a selling opportunity. So anytime you have a sell-off and it's in the blue zone, that's a buying opportunity. The same way, anytime you have a rally in the red zone, that's a selling opportunity. All right? Let's look at some other ones. MAN. Whoops, still have Facebook up there. We'll look at MAN. Once again, you think this could have helped you at all? Now, here we have a little, this is what a little students have trouble with, but remember, this is not a system. It's not a trading strategy. So just because you had 1, 2, 3 closes above, that does not mean you buy at the market. You have to have a buy signal somewhere right here, according to some strategy, okay? Now, if you didn't, that's good because we quickly went right back down low below. Now, once you had, let's see, 1, 2, and then you had closes below, but once you had 3 to 5 closes above, now it's off to the races, okay? Now, here you have 3 closes below. Now, that's enough to tell you that, well, maybe we're going lower, but you still have to apply structure. So this is what I was talking about earlier. This is not a system that says, well, Steve said 3 closes below, so I sell at the market. And look at, I lost all this money. No, that would be what you do for a system or a strategy that is rule-based. There are no rules here in terms of trading. This is just telling you what side to be on. Once you went back up above and had 3 to 5 closes, well, now you're back into the long game, okay? That was MAN. Let's look at something a little more prominent here, QCOM, okay, QCOM. Now, this is a great chart because, as you can see, we were below the buy-sell line this entire time, the fluid, and then once we had these closes here, look at, I mean, this was such a great sign here at roughly $55, and the stock now has gone up 40 points in the next month and a half, 2 months. Obviously, we didn't know that this was going to take off like this, but the market gave you clues in March, beginning first week of March, that it wanted to go higher. So that's what we mean by being on the right side. This is how you can add to your consistency. Sure, some of them could have looked and said, hey, this is major, if I get up, this is major resistance right here. Do you see how we've come up to this top? This is where all the institutions are saying you have to sell it because there's major resistance here, and you never want to go against the institutions. As you can see, we've come up here once, twice, 3 times, 4 times. That's silly. We don't look at any support and resistance. You know, one person's support is another person's resistance. It's too subjective. And I worked with the institutions 42 years ago on the floor of the exchange. They don't have any clear idea of what to do with the market than anyone else does. They just have a lot of money behind them. But that doesn't mean they control what's happening. They would put an order in my book for 500,000 shares and then cancel it the next day. So what happened to the resistance or the support? It was for one day and then it's gone. But meanwhile, you still think it's there. So I would not, the last thing in the world I would do is be relying on support and resistance based off institutions. The market told me well in advance back here that it wanted to go higher. Now my job is simply to look for buy signals, okay? That's it. And I don't care what strategy you're using. It could be one of yours, one of mine, but you would have a higher level of consistency doing that, okay? So that's why we want you to be in sync. That's what this whole presentation is about. Now, if you have any stocks that you're interested in me looking at, I can punch them up for you just if you have any ideas. Let's see, someone is asking in APC. Okay, APC. Yes, give the symbols because I don't know a lot of the names. If you just say the name, I won't know the symbol. So just give me the symbol. That's all I'm interested in. Okay, APC. This is, wow, this is very similar, the same thing. This entire time we were below the buy-sell line. Sure, we had 1 or 2 closes above. That's not enough to tell us to go long or to look for long. It continues to remain until we had this sprinkling right here. This was our sign that it wanted to go higher. Wow, look at that. So here's the perfect scenario what traders like to do. They love to play the blame game. They go, gosh, you know, how did I know this was going to take off? Look at this thing. It was trading at 45 and it gapped up to 60 and then it gapped up again to 75 or 73. Gosh, I wish I would have known this was going up. Well, now with this, you never have to play the victim, okay? Because it's such an easy and a cheap shot to always play the victim. Traders love to do this because that basically clears you. It takes you out. You don't have any responsibility. It wasn't your fault. Traders love to play that game. Once you can see what the market's telling you, you don't have to play the victim anymore. You can say, well, I saw in beginning of April that the market wanted to go higher. I took advantage of it or I didn't take advantage of it, but it was my decision. I knew this wanted to go higher, and someone would say, well, why? Were you looking at the interest rates? Did you know about the earnings or some news event that was going to come out? And you could simply say, no, it was above its buy-sell line for about 5 days, and so the market told me. The market told me. I didn't have to wait for the earnings or what the institutions were doing, okay? Okay, let's punch up another one. Tesla. Someone's saying Tesla, okay. That one I know the symbol too, TSLA. Now that one has been negative according to my memory. Yeah, as we can see here, we were above the 50-period moving average, but at this point right here in the end of last year, December, coming into the new year, look what happened. We started to have consecutive closes below. Even though we have 1, 2 above, we'd be right back below. We had 3 above, but not enough to look for any strategy because look what happened. And then since middle of January, we have been consistently below. So why would you want to buy this? Why would anyone want to buy this thinking that the institutions are buying it or that there's major support or that this was too oversold here? We had never been below this. Or even a better one I've heard is that, well, this low was not confirmed. We made a low and then we broke that low, but it wasn't confirmed. So this is why we bought it. Well, how good did that last? That was at roughly 320. It's now down nearly 80 points, okay? So sure, every once in a while you'll pick a bottom and it'll last well for a couple of weeks, but you're going to have to be very quick and get out quickly. And do you want to take your chance on that hard-earned money, going against, swimming upstream? Wouldn't it be better to simply say, well, listen, we're in the fluid sell zone. We're bouncing. I'm going to look for shorting opportunities. I'd rather sell than buy. And as I scroll here to the whole time we were there, let's once again add strategy number 4. Do you think you could have done well using these sell signals? This is what we mean by being consistent and in sync with the overall trend, okay? The beauty is that you're not trying to pick bottoms and then hope they last for a couple of more than a week or so. You're just simply going in sync with the overall market. Okay, someone else, let me see here. Let's see, someone is asking about is that letter L or letter I? I can't really read that from my distance. I'll just say that that's letter L, okay? Let's see. Okay, well this, if that's the one you wanted, we quickly went above here, had 2 closes below, back up above, so it's still having difficulty, but ever since the middle of February, this stock has been having a buyer's bias. So you should only want to buy. Every time you have a sell-off here, now it's a great opportunity to go long. So if that's the stock you were interested in, that's still with a buyer's bias. So you should be, remember there's 2 ways to buy. You can either buy while it's going up, while it's moving, just buy along the way, or you can wait for pullbacks within that, okay? Let's see, another one is LABD. Okay, now this is very interesting. Since January, we've been well below the buy-sell line, and you shouldn't have touched this at all if you were a buyer. And you probably don't want to short a $20 stock, but this is extremely interesting because we've had consecutive closes above, and it still remains above, all right? So I would only be looking at this from a buyer's point of view. Now, is this say to buy this at the market? No, I'm not recommending or suggesting that. I would say that the buy-sell line is just simply telling you that as long as it's above the 50-period moving average, that the market is telling you it is in a buy or it has a buyer's bias. So it's up to you. If you want to apply some strategy or something, that'd be fine. But according to the buy-sell line, you should be looking to buy this stock, okay? A couple more here before we go talk about a great offer I have for you. Somebody's looking at the QQQs, obviously, that the ETF that represents the NASDAQ. Wow. Look at this here. Now, this is very similar to the last stock we looked at. You see how we had, in that last stock, we had about 2 or 3 weeks where it was just hovering above and then it took off? Well, I'm not saying that that's going to happen, but you saw that same phenomenon right here. It was above, it hovered for about 2 or 3 weeks, and then it just started to steadily go up. And as you can see, it continues to go up. This is the beauty of the fluid buy-sell line, okay? CTL. I don't know what that is, but I thank you for giving me the symbols. Wow, this is a perfect example of how the fluid buy-sell line can help you. Look at this. Since December, we have been obviously well below the 50 period or fluid buy-sell line. There's no reason in the world to ever think of buying this. This is why most traders fail. You go to a chat room and someone says, this has never been lower. This is tremendously oversold. All the indicators, all the support is right here. It's a major Fibonacci support. It's a major Elliott wave buy area. All the institutions are buying it. You have to buy it right here, roughly 14, 15. It bounces for a week or two, and now the stock's trading at roughly a third the price, roughly 10 or 11. Why swim upstream? Better to stay out of the stock and wait for it to be above. So this is a great example of how this could have helped you. Now, let's say you were long this stock. If we go back a little further, let's say that you were long up here. Well, I know it hurts, but when you're wrong, you're wrong. And the best thing is just to cut your losses and get out. Say you were long this stock, you bought it at 23, and now you're out here because you have consecutive closes. You're out at 20. So you lost 3 points. Aren't you glad that you would have gotten out here at 20 as opposed to being down here? This is where most people say, well, I've lost so much money, I guess I'm in it for the long haul. I've got to just wait for the next 5 or 10 years for it to go back to break even. That's the way most traders trade. I'm sure many of you are in that position right now. Much better to exit, lose 3 points, and say, gosh, look at all this money I saved. You could have put it back into something that was going higher and made that 3 points back and then more. Okay, just time for a few more. MC, I don't know what that is. Mary Charles, right? Yes, MC. Wow, this is interesting. As you can see, this was well below the 50. It started to have a little bounce here, and it worked well from roughly 40 going up to 45, 46, but now back at 42, 41. If you had gotten long somewhere right here, you most likely would have exited and broken even. And that's a good decision, though, because now it's going down to roughly the 37 point. So the buy-sell line is telling you that we are in the seller's zone. Last one we're going to look at is WBA. And this is a great example of how well things are working when you're above. And then once you had consecutive closes, 1, 2, 3, that's enough at 75 to tell you shouldn't be in this. And now the stock has lost 25 or roughly about a third of its value in the next 3 or 4 months. Okay, see how this simple tool could have saved you, if you own this, roughly a third of your investment dollars by simply getting out and knowing that you shouldn't be in this. This is how useful this is. Last thing I'm going to look at is the spiders. That's the ETF that represents the S&P 500. Okay, same exact thing as we can see here. This is where we went below and we were out of the market, and this is where we got in above right here in the middle of January, and things are still, if we scroll in, things are still looking great. Until we have 3 to 5 closes below, there's absolutely no reason, according to the fluid buy-sell line, to get out. So do you see how simple it is to be in sync with the market once you know how to apply this tool? All right, so let's go back. Remember, we share with you this strictly for educational purposes only, okay? Now, if I leave you with one thing, it's the same thing my mentors told me some 4 decades ago, and that is, Steve, the market is always telling you what it wants to do. Not some guy in a trading room or a chat room, not some economist on TV, not some earnings report or some convoluted indicator, but the market, the source of everything you're trading, is telling you what it wants to do. Your only job as a trader is listen to the market and then jump on board for which direction it tells you. That's it. That's how you become a consistent trader. Okay, so let's recap. You can start doing this right now. Add the buy-sell line to whatever market, whatever time frame. I just shared with you stocks, but really you can apply this to 5-minute E-mini futures, to monthly charts. It makes absolutely no difference because it's just a 50-period simple moving average. But remember, whatever your strategy generates a signal, you must ask that question. Where is that signal? Where's the price in relation to the buy-sell line? If you get a buy signal below, the odds are over time you won't make money. A sell signal above, same exact thing. You want to be in sync with the overall trend. All right, we have a great attendee discount for all the people here today. We're going to offer you our PTS Primo Charting platform, the platform that teaches you how to be on the right side of the market. All right, we're giving you 30 days for only $7. That's our introductory trial. We know we have some people in the audience that have already taken that and they've fallen in love with it, but there are some of you that still have not jumped on board, and we want to make it simple for you by offering such a low price deal here. Here's what you get. You're going to get the enhanced buy-sell line, all those 4 different ways to use the PTS buy-sell line, but also a top-bottom 25% feature. This is what we feel is our most important chart pattern you should be searching for. It's already pre-canned in there. A strength of trend feature, something I designed with Pro Trader Strategies that automatically tells you the strength of any trend. It may be giving you clues that it may be running out of steam or building up steam. We have a signal scanner. You can scan for buy-sell line moves. You can also scan for different tools and techniques we have on the platform. You also have over 90 of the most prominent indicators, but we know that not everyone is a technician, and we're not here to tell you how to trade. We're just simply here to teach you things that have worked. So if you love to look at fundamental news, if you feel you must use that, then we're giving you free Bloomberg TV. We have a special media icon on our platform. All you have to do is click that on and the media page appears where Dow Jones information, economic reports, fundamental news comes live as you're looking at the charts. And then lastly, great personalized tech support. Any reason you can't load up a chart or you're having some technical difficulties, don't worry, we will be there to resolve any issue you may have. So this is all great. You're going to get all of this information along with 42 years of personal experience there answering any question you may have. 30 days for only $7. Okay, here's how to take advantage of this great offer. Once again, contact Pro Trader Strategies. I designed the platform with them. We made it simple for you so that you could come on board. You can either email them or call them if you have any questions. But for $7, you have to take advantage of this. That link below is the link that takes you to the sign-up page, but it's not a live link. The live link is posted on the chat box on the far right-hand corner, okay? So I'm going to leave all this information up here. Any questions you may have, put them in the question and answer box. Some people are asking, does this work with forex? Yes, it does. Remember, any market, any time frame, any direction. In fact, this works great with forex because the forex markets, in my opinion, are some of the most trending markets out there because they have so much money behind them. When they start going in one direction, they really start going. And so this will oftentimes give you advanced warning as to when the market wants to change its direction. So yes, it does. Now, people are asking, should we use the exponential moving average? You can. I've experimented with different moving averages with weighted, with different time periods, 34, 10, 20. But in my 42 years, this works the best because it can easily transfer onto any market, any time frame. So in other words, you don't want to be looking at a weekly chart and have the 50 up there and then say, well, now I'm going to look at 5-minute bars, so I guess I got to go down to the 20 and change to an exponential. You want to keep things the same. It doesn't matter what market, one time frame, what direction, and so the 50 works the best. But feel free to experiment. And remember, this is simply a tool to tell you what side of the market to be on. It's not a strategy, so it's not something written in stone. As long as you use that basic concept, if price is above, you'll only have a buyer's bias. If price is below, you'll only have a seller's bias. I'm sure you can use other time frames or other types of moving average, but my experience, the 50 works the best, and I've experimented with it for 4 decades now. Okay, yeah, you can use it once again for any market. Forex, commodities, I mean, experiment right now. Most of you have a 50-period simple moving average, but you don't have the different features we have along with all the ease of use on the platform. Remember, the platform comes with tons of other information. I just talked about one of the many different features on it. So if you have any more questions, contact Pro Trader Strategies, but please take advantage of this $7 offer. You'll probably spend more than that on a cup of coffee for 2 this morning, all right? But you're going to get over 40 years of experience for 30 days. I can't think of a better way to get acquainted with this, okay? As we conclude, I just want to say thank you so much for taking time out of your Saturday morning. I wish you the best of luck. I hope you saw how much attention to detail we give to really wanting to sincerely teach you. But most importantly, I look forward to all of you becoming students of mine and taking advantage of that 30-day $7 offer. Thank you so much. I'll see you next weekend. Bye-bye.